Zoom people, can you hear me? Yes, okay. So, finally, we start today's lecture. So, we are meeting after July. And we today we will complete that chapter. Which chapter? Interest rate risk management we will complete. And I guess Monday, no, tomorrow, no, when is my next lecture? Monday. So, Monday, when we meet again, we will be starting with advanced capital budgeting chapter. Okay, advanced capital budgeting on Monday. After that, after advanced capital budgeting is done, then I guess November 26, May 26, and I think little bit of demerging could happen, because then the two chapters which are left for May 26 are connected with Forex, that is currency swaps and international financial management. Okay. All right. So now in your notebooks, everyone has written something. What is the last thing we have written? Just check. Tomorrow also my lecture is only there. No, no. Okay. Okay. All right. So have we already written some notes on interest rate options? Already notes are written. Okay. So that is good news. I would request you all to please read the notes that you all have written. Everyone, please. Thank you all for coming on time for the 7:30 lecture. Everyone is ready. So we are starting 2 minutes early. Actually, we should start on time, but since everyone is here, we will start now. Huh? Okay. Please read interest rates, cap, floors, and collars. Chalo. Shh, shh, shh. Huh? All done? So, do you remember what interest rate risk was? What was interest rate risk? Not filing the income tax on time will give result in payment of interest on the taxation that is to be paid. That is the interest rate risk. No, no, no. What was the interest rate risk? The risk is that if I am a person who knows today that in future I want to borrow or I want to lend or invest, then do you realize I don't know at what rate I'll be able to lend or borrow, and that I don't know rate, correct, gives me risk. Everyone clear, no? So, to hedge that risk, do you all understand? We took help of certain tools. Which tools we took help of? Perfect, on time you have come today. No, no, really I'm saying the lecture today was at 7:30. She knew Jyotish. Okay. So tell me, what tools we have taken help till? Four. One was forward rate agreements. Second was interest rate futures. Third was swaps. And now we are going for options. How did forward rate agreements look like? You remember it, 2y, 3y, 1y, 2y, and all that. So if it is 1y, 2y, forward rate is 8%. What does that mean? 1y, 2y, forward rate. After 1 year, for 1 year. Correct? Today only we are freezing the rate. That is called as forward rate. Okay? Forward cover, forward contract. Interest rate futures, however, don't appear like that. Interest rate futures will say interest rate futures are trading at rupees 92. Now 92 means that rupees is irrelevant. What you should understand is that the F0 embedded within that, can I say, is 8%. Everyone clear, no? 92. Okay, if I want to borrow in future, Then forward rate agreements we used to buy. But if we want to borrow in futures we will have to sell. I hope everyone remembers sell futures at the rate 92, and then to close we will buy futures at the rate whatever F1 is. Do you remember so much discussion we did on this? Don't look at me like this. Hello? Okay. And then we went on one full lecture 7 a.m. to 2:30 p.m. You remember here only half the lecture was conducted, right? In these seats where all of you are sitting right now. There was a moment back in history of time that some Homo sapiens used to sit here and we had studied interest rate swaps. Full day we did that only, if you remember, right? 7 to 12 we were down, and then 12 to 2:30 we were here. Then students, we went on to just write down, in interest rate swaps, lot of things I taught you. First I taught you how to construct a swap. Second I taught you how to use a swap to convert a fixed rate liability to a floating rate liability, or a floating rate liability to a fixed rate liability. Then I went on to teach you how to use a swap to convert a fixed rate interest inflow, which means fixed rate asset, to a floating rate asset, and vice versa. Then I taught you how to construct the swap if there is a swap dealer in between. You remember that swap dealer in between, just in between the chasma there is that SD. Hello, he takes commission. Do you remember that? Then I also taught you how to do arbitrage using comparative rate advantage concept. Do you remember comparative rate advantage? Gain is calculated and it is equally shared, or 3:2 ratio it is shared. I think all that we studied in swaps, and in that also how swap dealer also comes and takes his share. You remember weaker company has to pay. Weaker company pays externally, but actually the entire gain sits with the weaker, something like that. Do you remember we had done? Okay. So then we had completed till there, and now we came to interest rate options. We will understand all of this through the following questions. Everyone now read question number 4. Today only questions are there, but of interest rate options. I don't need to teach you interest rate options much because you know options and you know interest rates. Concept over. Please come to question number 4. Please come to question 4. Read question 4 carefully, please. Zoom people, please switch on your videos. Thank you. Otherwise, I'll put you in waiting room. And Amruta, तुझं अमय झालंय तिकडे. Now, all done. So, what are they saying? Everyone, let's start. Zoom people, waiting room. Just 1 minute. Whom to put? I'll start with letter A. Okay. Ready? Now, X Limited would require 500 crores after 6 months. Would require means they want to borrow or lend in future. Okay, and is worried that its cost of capital at that time might go up beyond 11%. So they are thinking cost of capital means, I hope you realize, interest rate. Interest rate, do you realize, is beyond 11. They're fearing that what if the interest rates go above 11%. Hence it decides to buy a cap at 11% on 500 crore for 5 years, interest to be paid at quarterly interval. What does this mean? I decide to buy a cap at 11%. Any idea what this must be? Cap at 11% means? This is basically a call option that gives you a right to borrow at the rate 11. I hope everybody is clear. It gives you a right to borrow at the rate 11. Hey, do you understand on due date? If S1 is greater than K, come on, do you remember discussion of call option? If S1 is greater than K, can I say the call becomes in the money? In the money means, can I say S1 minus K is the payoff you will get from call? So just imagine for some time that the S1 goes to 13%. Okay, if the S1 goes to 13% and if you have bought a cap, don't worry, outside you will have to pay 13 only, but from the cap, can I say you will get a gross profit, gross payoff of 2%. Everyone clear? Of course, the net will be little lower because you will have to pay some premium also. Everyone, are you all able to understand? Hello? Sir, why should we pay premium? They should be free of cost. No, it's a call option, which means tomorrow if the interest rate goes to 9%, then you will not be suffering a loss of 2%. I hope everybody is clear. If it goes to 9%, can I say S1 is less than K? S1 is less than K. Can I say the call is out of money, lapse it, go home? Can I say you will have to borrow at the rate 9 only? Nobody will force you to borrow at the rate 11 like a futures or a forward. Where there can I say that rate is fixed for both parties, hence it is equally risky for both parties, and hence for both parties that transaction is free of cost. But can I say call option is not equally risky for both? I hope everybody is clear. Call option, do you realize, is complete like an insurance you are taking from the holder's point of view. For that they are paying premium. Everyone clear? In fact, you think about the words, one book had written, call option is like buying insurance. In insurance also you pay premium, no? Same thing. Okay, so understood everybody, clear till here? So then it pays, okay, they are saying it pays a premium of 5 crore to Z Limited. Now can I say this 5 crore is purely cost for X and purely income for Z? Who do you think Z is suddenly out of the picture? Somebody Z came. Who is Z here? Call writer. Everybody clear? Call writer. Done? Now they are saying you are required to bring out the cash flow implications for X if the interest rates after 6 months are as follows. So basically they are telling you if the S1 is this, then what will be the cash flow implication? Now students, this is, can I say 6 months, no, not 6 also, I guess quarterly intervals. Are you all there? Basically after every quarter. Why did they use the word 6 months? Is basically your loan will start after 6 months. Are you all able to understand? Your loan will start after 6 months. After 6 months, the interest rate could either be this or this or this or this or this. Today we will not know that. Everybody clear? We will come to know about it only after 6 months. Hello? You're not following? Everyone clear? No? So after 6 months, tell me if the interest rate is this. Do you realize being a borrower, this is irrelevant for you. You will, do you get it? Pay this much. You have a call option at 11. Can I say the call becomes irrelevant? Come on everybody, are you all understanding? The call becomes irrelevant. Is sure, no? What is the interest that you will have to pay for 3 months? Do you realize it will be 500 crore into 10.45%. Don't do it, forget it. Into 3 by 12. Everyone clear? And from the call option you will get nothing. Point number 1 clear? What about point number B? Come on, point number B. 11.45%. Can I say 500 crore into 11.45% into 3 by 12 you will pay in spot? And that 500 crore into 0.45% into 3 by 12, do you realize you will get from call? Hello, everyone there? Sure, no? Do you realize your effective interest rate will be 11% only? Getting clarity? Okay. Point number C, 10.5. Do you realize 10.5 only you will pay? Hello? 14. I will pay 14 outside and I will get 3% back. Here, I'll pay 13% outside. I'll get 3%. I'll get 2% back. Everyone clear? Simple na call option. I guess you realize nothing great now. You know everything. So notebooks, write down question number 4. Everyone please write down question 4. Write down point number 1. Write down point number 1. And in that write down cash flow for X Limited. Cash flow for X Limited. Cash flow for X Limited. Okay. Students, please read. Please read. Everyone, don't write down. You're able to see my notes. Please read point number A, no? And don't think about why. Don't read about why. Just read. I'm sorry, hold on. Don't think about why means don't think about Y limited. Think about X limited. Everyone there? Huh? Now read. Understood first line? Clear? Okay. Point number B. Very good. Now I have done bifurcation. Point number B na 11.45. Can I say call is in the money? Please read. I have told you all this. Is it clear? We will borrow at the rate 11.45% outside. And do you realize we will get a reimbursement of 0.45 from the call? Hello, you're sure understanding, no? Like that, can I say for all the cases you have to write down? Can we quickly complete it, please? Write down question number 4. Question number 4. Question 4. I already done na point number 1 X limited. Write down point number A. If interest rate in the bracket write down borrowing equal to 10.45%. And write down as I am dictating, X will borrow 500 crore at the rate 10.45% spot. X will borrow 500 crore at the rate 10.45% spot. Next line. Since the call is OTM, comma, call will be lapsed. Next line, interest equal to 500 crore into 10.45% into 3 by 12. How much is this? Hmm. 13.0625. 13.0625. All done. Point number B. If interest rate is 11.45%. If interest rate is 11.45%. If interest rate is 11.45%. Write down next line. First, so what will you write? X will borrow 500 crore at the rate 11.45% in spot. Next line, since call is ITM, gross payoff equal to S1 minus K. Gross payoff equal to S1 minus K. Which is equal to 11.45 minus 11 equal to 0.45%. Next, and write down spot interest paid equal to 500 crore into 11.45% into 3 by 12. 14.3125 crore. Next line, gross payoff from call. Gross payoff from call. Gross payoff from call will be how much? 500 crore into 0.45% into 3 by 12. .5625. Net payment equal to what is the net answer coming to? 14.3125 minus this, and you will get 13.75. I hope you realize this number is 11%. Hello, 11.45 gross you are paying, 0.45 reimbursement you are getting. This is 11%. Everyone following? Now look at me. I have taught you one out of money. I taught you one in the money. Students, let's not waste time. Write down ... and so on for this question. Understood now? There is no point in wasting time for every... It's an illustration. I hope you're getting it. Okay. Can we go to the Y limited, please, everyone? You want to do time pass? Every interest rate, keep checking. Same thing is there, okay? And so on. So, now... Acha, by the way, you all understood now why in first one it is out of money and second one it is in the money. S1 is greater than K in the second one and S1 is less than K in the first one. Everyone done? Okay. Now let's talk about Y limited. What is Y limited saying? Y limited is expecting surplus of 100 crore after 6 months and is worried that interest rates may fall below 7%. Oh, can you see now opposite? He is a person who knows that he wants to lend in future. Everybody there know? He wants to lend in future. So to lend in future, do you all understand? He does not need a cap. He needs a floor. What does this mean? Please listen carefully. Cap means as it is going up, I want to cap it. I hope everyone is clear. Floor means as it is going down, I want to stop it at the floor. Floor should be the bare minimum. I hope everyone understood. Ideally, the word should have been ceiling and floor. Everyone clear, no? But they have used, for ceiling, they have used the word cap. Understood what I'm trying to say? Tell me, a person who wants to lend doesn't want a ceiling. Can I say a person who wants to lend will always want a floor? What do I mean by this? Meaning, if the interest rates in the market go up, the lender does not want it to cap it. I hope everyone is clear. But when the interest rates, can I say, will go down, they would definitely want to floor it. Hello, everyone there? But a person who wants to borrow in future, do you realize, will not go for a floor? Why will they say, no, minimum interest, this much I want to pay? No, let it go down further, no problem. But they will definitely want a cap. I hope everyone is clear. Understood the language? Students, can I say floor option is like a put option? Everybody clear? Floor option is like a put option. If you buy, look at me, a call Forget call. If you buy a cap, can I say you are buying a right to borrow at the rate K? I hope everybody is understanding. You are buying a right to borrow at the rate K. If you are buying a floor, you are buying a right to lend at the rate K. Come on, everybody, are you able to understand? We are buying a right to lend at the rate K. Have we written all this? Buying a cap means buying a right to borrow at the rate K, and buying a floor means buying a right to lend at the rate K. Can I say here Y Limited is fearing, array, what if the interest rate falls below 7? So what should Y Limited do? Y Limited should buy a floor with a strike rate of 7%. Hence it buys a floor at 7% on 100 crore for 3 years on quarterly. Pays a premium. So students, you are now required to bring out cash flow implications for Y. Now do you all understand? I will now not look at the borrowing rates. Everyone clear na? I will now look at the deposit rates, the smaller ones. Heath, I hope you understood. Everyone ready? So now the smaller ones, tell me 6.5% if the S goes to 6.5%. Can you please tell me put is out of money or put is in the money? In the money. Do you realize the very good answer you have understood? Huh? So do you realize that actually Y will have to lend at the rate 6.5%? And from the put, can I say he will get K minus S1 gross payoff? Everyone remember this, for a put holder buyer, 0.5% he will get. So 6.5% he will get from the spot, 0.5% he will get from the put. Everyone following? Do you realize his effective interest rate will be 7? What about 7.5? Come on everyone. Not at the money, out of money. Everybody clear? 7% na, is the strike rate. So can I say if 7.5, then Y would definitely want, Y will say why not? Everyone clear? No? Do you realize I will go for 7.5%? And the put becomes OTM. Everyone clear? Like that, 2 items we will write and we will go ahead. Everyone following? No? Okay, write down. Question, point number 2. Write down cash flow for Y Limited. Cash flow for Y Limited. Cash flow for Y Limited. Everyone ready? Cash flow for Y Limited. Students, write down point number A. If interest rate bracket deposit is 6.5%. Interest rate bracket deposit is 6.5%. Try on your own. What will you write? What did you write? Y Limited will invest or lend in the spot market at the rate 6.5%. You wrote this properly? Since the put is ITM, since the put is ITM, no, S1 less than K. Everyone clear? Gross payoff equal to K minus S1. Like that you have written, no? Gross. Upstairs we have written, no? S1 minus K, like that. हेलो, ग्रॉस पे ऑफ लिखा है था S1 माइनस के, ग्रॉस पे ऑफ इक्वल टू K माइनस S1, दैट इज 7.5, आई एम सॉरी, दैट इज 7 माइनस 6.5, 7 minus 6.5 equal to 0.5%. 0.5%. 0.5%. So, interest received in spot. Interest received in spot. 100 crores. Interest received in spot 100 crores into 6.5% into 3 by 12. 100 crore into 6.5% into 3 by 12 equal to 1.625. Gross payoff from put equal to, gross payoff from put equal to 100 crore into 0.5% into 3 by 12. Now we are assuming that in spot, na? Otherwise we wouldn't have gone for quarterly compounding in option. Otherwise there is no point, na? You understood? I'm talking to you. सुना मैं क्या बोला लास्ट में? Done. So we complete point number A. Can we go to point number? What is the final answer? 1.75. You added na both. Hello, you added both, and I hope everyone understands this 1.75 that you got is exactly 7%. Everyone clear? No, it is 7% for 3 months. Huh? Okay. Point number B is very nice. Option is to be lapsed. Are we done? Chalo, and so on. What did you write here? X Y Limited will invest at the rate 7.5% in spot. Correct, no? Since the put option is OTM, the put will be lapsed. Done, the put will be lapsed. Can I go ahead, please? All right. So, we have completed question number 4. Now, question, write down and so on. Please let me tell you, question 4 is not an ICEI question, but question 16 is. So, everyone very seriously read question 16. बंद करना है. Feeling cold? AC remote है अपने पास यार? Anyone has the AC remote? Okay, हाँ कर दे, बंद कर दे. Okay, everyone, please read question number 16. ICAI question. AC का रिमोट पे देना इकडे इकडे दे all done okay chalo read question number 16 okay everyone done can we start all right so now two companies ABC and XYZ approach DEF Bank for a forward rate agreement. Everyone, forward rate agreement. First love, huh? Okay. Two companies ABC and XYZ approach DEF Bank for forward rate agreement. They both want to borrow 100 crore after 2 years for a period of 1 year. Oh, after 2 years. For 1 year, 2y, 3y, which I hope you realize they are using the words 24, 36. I hope you get it. It is the same thing. Hello, 24 month, 36 month is nothing but 2y, 3y. Okay. Bank has calculated the yield curve for both companies. So I'll tell you what this is. Please pay attention. These are students the spot rates. In case you remember what spot rates are. Today, if you remember the whole discussion of spot rate versus forward rate versus YTM, three rates I had explained. One question I guess I had solved completely using three, discounting using spot, discounting using YTM. Anyone remember something we had done like that? At least you know that we had done it. Okay. Anyways. So if you borrow today for 1 year, then this is the per annum rate. If you borrow today for 2 years, this is the per annum rate. Everyone there? This is like strips. Hello. And if you borrow today for 3 years, then this is the per annum rate. Students, do you realize that ABC is a weaker company than XYZ? XYZ must be having better credit rating. That is why can I say XYZ is being offered lower interest rates. Hello. So तुमको कुछ भी नहीं समझ रहा है? Some people understanding, no? Okay. So can I therefore say the institute is also telling for those who didn't understand anything, the difference in yield is due to lower credit rating of ABC. But this line was of no relevance because of course it must be because of credit rating. No? Hello. You are required to calculate the interest rate of interest EDF bank would quote under a 24 by 36 FRA using the information. Do you know how to do this? They are asking you calculate the 2y 3y forward rate. Have I taught you how to do this? Calculate the 2y 3y forward rate. How will you do it? 2y 3y. Think about xyz only. Come on. कुछ भी याद नहीं है. Have I taught you or have I not taught you this? How to do it? Think. How to do it? Can I say this is for 3 years, this is for 2 years? Huh? We have done that now. We will get the 2y, 3y as a balancing figure in the middle. Okay. So write down question number 16. Okay. No, sorry. Wait, where am I? May 26. So write down question number 16. Point number 1. Calculation. Pratham, correct answer. Thank you. Calculation of theoretical 2y 3y, or you can write that is 24 month 36 month forward rate. 2y 3y forward rate. Calculation of theoretical 2y 3y forward rate. So first we will do for which company? XYZ. XYZ, no? XYZ. So what is the 2-year spot rate of XYZ? Please tell me. 2-year spot rate of XYZ? 4.2%. If face to face respond now, please. Then tell me what is the 3-year spot rate of XYZ? 4.48%. 4.48%. So you remember how to do this? 1.0448 raised to 3 is equal to 1.042 raised to 2 into 1 plus r. I have taught you or not taught you this? No? Okay. You can think like this. You have two options. One option is I invest directly for 3 years. Second option is I invest for 2 years and then for 1 year. You remember this I had explained. So what will be the rate that you should get after 2 years for 1 year that should match the 3 years? Everyone clear? You all are not paying attention. Should I repeat again? Sure, understood, remembered. Okay. Zoom people remember, no? Give me a yes on chat box or I think enough, no? Random. Okay. Okay, I'll start with Adarsh. First word. Adarsh video is on. Okay, great. Then next is Jairaj. Okay. Send to waiting room. Okay, wait. In the waiting room. Done. Next. Rushikesh. Okay. Rushikesh video is on. Thank you. Okay. Ready? Alright. 3 people gone in waiting room. Meet is also there. Okay. Next is. Okay. Done. So tell me what is the answer you got? 5.04. Can you please replicate this for what is the next company's name? ABC. Everyone please. 6.38%. 6.30. All done. 6.38%. Hey, कौन है रे? 6.38%. All done. All right. You all got this number, no? Everybody. Next. Students, now see how institute has tricked you all in point number 2. Very intelligently made question. Dhyan dena. Everyone focus. They are saying, suppose bank offers. Acha, by the way, what did the bank offer as forward rate? 5.04% it offered to the first company, 6.38 to the next. Now they are saying, hey, we are offering interest rate guarantee. What is the meaning of interest rate guarantee? No. Guarantee is another word for options. Everyone clear? Interest rate guarantee is another word for interest rate options. So if you want, you can put it in the original theory only where you have written interest rate options. Interest rate options are also called as interest rate guarantees. Guarantee means, look at me, I'll tell you why it is so. You know, it is like this. If you are a borrower, I am giving you guarantee. Maximum you have to pay this much, not above it. It can be below also, but not above it. Or if you are a lender, I'll say minimum you will get this much. I'm giving you guarantee. Either this or above. So it is a cap or a floor. I hope everyone is following. That is why they are called as guarantees. Look at me. Can I say the other products are not guarantees. They are obligations. Come on everyone. Whether it is a forward rate or a future or a swap, can I say both parties are obliged? Nobody gives guarantee like that. Everyone following? Guarantee. Who gives guarantee? Insurance companies. Everyone clear? No? Insurance companies are giving guarantee for which you have to pay premium. No? Everyone clear? So, acha, by the way, one more hint. For a premium of 0.1, please note there is no derivative product which has premium except options. Everyone clear? Only option has premium. Everyone clear? Everyone else has margins. Everyone following? No, this is premium. Only options has a cost. Everyone else is free. Everyone clear? Only option has a cost. So what is this bank saying? I am offering you an interest rate option of with a premium of 0.1% on the amount of loan you are required to calculate the interest payable by XYZ if interest in 2 years turns out to be this and this. Let me explain. Students, you become XYZ Limited. Do you realize you have right now in front of you a 2Y, 3Y forward rate at 5.04% with me? Come on everybody, are you all paying attention? 5.04. As you are about to enter into that forward rate agreement with me, I tell you, boss, I have got one more option for you. I can, this same 5.04% I will give you as a call option. Come on, as a cap option. Why am I talking of cap and call? Because can I say you are a person who wants to borrow in future? Everyone there? You will say, bank, what does it mean? I will say, if you buy the cap option today at 5.04% strike rate, 5.04, which you got in the notebooks, that forward rate is there. Instead of taking it as forward rate, if you take it as strike rate, then what will happen? If it becomes a cap for you. What does a cap mean? Means tomorrow if the interest rate goes to, instead of 5.04, let's say it goes to 6%, then you will have to borrow at the rate 6% outside, but I'll compensate you with 0.96. Can I say your effective cap will be 5.04? Then you will say that though is available in forward trade agreement also. There also 5.04 now fixed rate is there. I will say no, but tomorrow if interest rate goes down to let's say 4%, then also you have to pay 5.04 is wrong. I hope everybody is clear. In an option, if it goes to 4%, the cap becomes out of money. You will be able to pay only 4% only, which means in the upside it caps at 5.04. In the downside there is no floor. Everyone clear till here? Do you realize that is an option? Now you have an option to either exercise or lapse. You say, wow, then who the hell wants to go to a forward trade agreement? I'll say no, this is not free of cost, correct? This option, can I say, has a premium of 0.1%. Everybody clear till here? Now students, tell me, if the interest rate actually goes to 4.5%, do you realize the cap, which is having a strike rate of 5.04, will be lapsed? Out of money. Come on everybody, are you all understanding? It will be out of money. The effective interest you will pay is 4.5 only. But if the interest rate turns out to be 5%, 5.5%, do you realize the cap is in the money? You will pay 5.5 outside. But do you realize you will get 0.46? No, sorry, 0.46, no? 0.46% considering 5.04, 0.46 you will get cash back. Are you all getting it? So here it is 4.5 and here becomes 5.04. Everyone clear? No, effectively. Hello? Not following? Clear? Can you see the meaning of cap? It will not go beyond 5.04. It is 5. I'm giving you guarantee. It is either 5.04 or lower. But for this, do you all understand? Your effective outflow will be this plus 0.1. Plus 0.1, considering the premium of 0.1% that you have to pay. Everyone, are you all able to understand? Hello? So can I say it is either 4.6 or it is 5.14? Everyone clear? 4.6 or 5.14. A premium though you have to pay only, no? Hello. If you remove the premium, then cap is exact 5.04, but then it is not free of cost. All heard and understood everything? Any doubts? Anybody has? No. So one thing you should remember if this question comes in the exam, can you see very clearly they have not mentioned what is the K in the cap. First of all, they have not mentioned it's an option. They use the word guarantee. So please remember in the exam it is an option. Premium word should trigger that it's an option. Secondly, sir, where is the K? How did you know K is 5.04? So institute has basically told that whatever forward rate was offered to you, that same rate has been taken as the cap strike rate. It is not mentioned in the question. Check please. It's an implicit assumption. Everyone clear? So I'll just take you to the notes. Okay. Students, read. I have written one note for you all. ICAI has assumed strike price to be the forward rate, that is 5.04. So interest rate cap is 5.04. Premium, can I say, is 0.1. XYZ wants to borrow, thus or therefore we will buy a cap. Everyone ready? If S1 goes to 4.5, cap is out of money. Gross payoff, I'm sorry, hold on. Gross payoff is payoff. Gross payoff, do you realize, will be dash. Come on everyone, gross payoff will be dash. Premium you have to pay 0.1. Everyone paying attention? Can I say your total interest paid will be 4.6, 4.5 plus 0.1. And if the interest rate goes to 5.5, cap is in the money, 0.46 you will get cash back. Come on everyone. Hello. Premium you are paying 0.1. Do you realize 5.14 will be the net interest paid? Understood my presentation, no everyone? Copy this as it is. They have not asked this for DEF, I think. Just check point number 2. Only XYZ is there, na? All done? So this was question number 4. Sorry, 16. Okay. Can I start? Now come to question 21. Please come to question 20. You can write, you wrote this down, final rupee payable, final interest payable. Okay, please come to question 21. Question 21 is again from Institute Lit. It's there in the module also. Please everyone, question number 21. It looks like a big question, but it is not. Okay, please read it carefully. It's a very simple question. If it comes, it's great because it's very simple. Are we ready? Okay. A textile manufacturer has already taken a floating interest rate loan of 40 lakhs on 1st April 2012. The rate of interest at the time of inception is 8.5%. Interest is to be paid every year on 31st March. Hey, can I say on 31st March 2013 will be your first interest payment? Come on, everybody. What an energy I'm getting here. Hello, yeah, please help me. I can't teach. Ready, everyone? Okay. So 31st March 2013, do you realize will be the first interest you are going to pay? Tell me, is the interest that you are going to pay on 31st March 2013 uncertain or certain? Certain. Very good answer. Can I say 8.5%? Na, this rate only will be there. The rate is decided not at the end of the period. The rate is decided at the beginning of the period. Everyone remembers this? Okay. And the duration of the loan is 4 years. Okay. In the month of October, the Central Bank of the country releases following projections about interest rates likely to prevail in future. Are you well there? So RBI comes out and says, on 31st March 2013, we feel the interest rates will go to 8.75, 10, 10.5 and 7.75. Everyone, are you all there? Students, tell me, when will be your last interest payment? First payment will be 2013 March, 2014 March, 2015 March, 2016 March. Can I say this rate actually is irrelevant? No, you didn't understand. The rate on the last date of my payment, can I say that is relevant for someone who takes a loan then? Everyone clear, na? Till here? Okay. Show how this borrowing can hedge the risk arising from the expected rise of interest when he wants to peg. No, the word peg here refers to cap. Okay. When he wants to peg his interest cost at 8.5%. Everybody clear? Hey, do you realize that this person, when RBI comes out with this person will become afraid, no? Because can I say today the interest rate is 8.5, but RBI is saying it will become 8.75, then next year 10, then 10.5. I hope you're realizing he will become afraid. He's saying, no, I want to max pay 8.5 only. Can I say for him to maximum pay 8.5, what he should do? He wants a guarantee, I want 8.5 only. What he should do? He should buy a cap at the rate 8.5% strike rate. Are you all able to understand? So assume that the premium negotiated by both parties is 0.75 to be paid on 1st October 2012, which means when RBI came out with all this, at that time only we ran somewhere and we said, Baba, give me a cap option. Everyone clear? At that time only I have to pay 0.75 upfront payment, game over. And the actual rate of interest on the respective due dates happen to be as follows. Do you realize now they have given to you what the actual interest rates will be on those respective dates? Can anyone tell me why I laughed? Do you realize this entire paragraph is useless now? Did you understand? This question is as simple as question 4 we did at the start of today's lecture. Hello. Did you understand? If there was an X limited but a cap option at this and the interest rate is this. That's it. There is nothing great. Show how the settlement will be executed on the respective dates. Students, first of all, can I say the cap that you have bought is at the rate 8.5%. Everybody clear? The first settlement, do you realize, will happen on 31st March. Come on everybody, first settlement will happen on 31st March. Now if I take you to the solution, this is institute solution. Let's read what they are saying. Whatever I told you that they have written. As borrower does not want to pay more than 8.5% on this loan, where the rate of interest is likely to rise beyond. Hence he has to hedge the risk by entering into an agreement to buy interest rate cap. Say, can I say nothing new here? That I have been telling this only. Notional principal 40 lakhs. This is the principal. Strike rate 8.5%. This is the K, hello. Reference rate, can I say whatever is the interest rate applicable to this loan? Reference rate means what is the S1 you will compare with the K, that S1 they have given in the question. Settlement date, can I say 31st March every year. Duration, can I say is till 31st March 2016. Premium is negotiable between the two parties. I don't know how they have written the solution. Too much unnecessary information is there. To purchase the cap, the borrower is required to pay the premium upfront at the time of buying caps. The payment of such a premium will entitle him with a right to receive the compensation from the seller of the caps as soon as the interest rate of the loan rises above 8.5%. Is this language understood? Please read again. As soon as S1 crosses K, I am entitled to a compensation from the call writer. The compensation will be at the rate of difference between the rate of none of the cases. The cost of this loan will rise above 8.5% calculated on 40 lakh. Which means they are saying that in the cases where it rises above 8.5%, there I will get difference. Everyone clear? If it goes below, I will get nothing. Hello, everyone clear? This implies that in none of the cases, the cost of this loan will rise above 8.5. This is cap, hello, it will be 8.5 or below. I hope everybody is clear. This hedging benefit is received at the respective interest due date, and the cost of the premium is to be paid only once. That, can I say, upfront cost of premium means basically that 0. whatever percentage premium you had to pay, that is to be paid upfront. The premium to be paid on 1st October, can I say this is correct, 40 lakh into 0.75%. I hope everyone is following. 30,000 premium I will pay. Can I say by paying this 30,000 premium, I am now secured for the remaining 4 years, insured. Whatever happens, max interest rate I am capping, I am pegging at 7.5%. Everyone clear? I'm sorry, at 8.5%. The payment of this premium will entitle the buyer of the caps to receive compensation from the seller of the caps, whereas the buyer will have no obligation. Unnecessary information. The compensation received from the buyer of the caps will be as follows. On 31st March 2013, finally, can we start please? Okay. Students, please read this, connect with your question and tell me, did you understand? How did you get this premium? Any idea? Now, do you understand that did you get 10.2 somewhere? Please check. 10.2, can I say is S1 on that date? Hello. And this is, can I say K? 1.7%. Do you realize? You're understanding, na everyone? It is in the money. So the amount of compensation will be 40 lakh into 1.7%. That is for this date. Like that, students, please check all. Na? I will not waste time on this. Everyone, please check. I already discussed this in question number 4. Check every rate, please. I hope you cannot understand the question just by seeing the solution. Huh? You have to compare the rates. Which point in the question will you check? The second point. Hello. Second point, every date's S1 is given to you. Keep comparing. Na? Keep comparing, will get the answer. Is it making sense? Everyone done? Can we go ahead, please? Sure, na? Hello, everyone there? Okay. So, students, this solution, can I give it to you as an image? You will write it down later. And I think I should give you only this much image. You're understanding, no? All this is irrelevant. Na? I hope you're realizing they have, what has the question asked? They are only asking you, Acha, okay, yeah. This is the problem. They are first asking you, show how this borrowing can be hedged. You're understanding? So there you'll have to write that, okay, I'm going for a cap option and all that. And then they are telling you, show how the settlement will be executed. Everyone clear? There are 2 points here. Because of that, so much institute has written. Otherwise, question clear. Everyone concept understood. So you will leave some space for this question. Question 21, I'll give you the solution on today only. So just write down question 21. Or should I give you the module address? You'll write from there. I'll give screenshot from the module only. Okay, चलो. मॉड्यूल का स्क्रीनशॉट देता हूँ. मैं स्क्रीनशॉट देता हूँ उस पर क्वेश्चन 21 लिख के देता हूँ. Done. चलो. So in the notebooks now, how much side now? I think I'll have to leave 2 sides. Leave 2 sides for question 21. And then I would like you to come to question number 13. This I have not seen in institute, but it might be an ICI question, might not be. I have not seen since long, but it's a very well made question. Very, very well made question. Everyone read the question very carefully. And there is one printing error. You please do this. DEF has bought an interest rate cap at 2.875%. Amazingly made question. Read carefully. Students, please cancel question 12. Huh? It's a misprint. Look at the question. There is no question only. Just cancel question 12. Cancel it off. 12th is no question. Read from 13th. Okay, so listen. Apart from this, which question number is pending then? 14, na? Okay. So what I want to do is listen. Um, Today, no, we will go slow on 13. 13 is a very important question. We'll go very slow. 14th is a 5-7 minute time pass question. 14th. Huh? So what I want you to do is I'll give you my YouTube video on 14th. I have it. It's a 5-7 minute video only. Can you knock it off on your own? 14th, please. 13th we will focus. And listen. Many years ago, in one of ICAI's past exam question, they had asked one very nice question on interest rate option. Okay, they had asked one very nice question on interest rate option that is not there in our book. Can I just add that one extra questions video also behind question 14 and give you a little bigger video? You see both. So basically in one shot, two of our purposes will be solved. Our chapter also classwork will get over. And please a little bit cooperate because I've done so many extra questions for you. I hope you understand. One small classwork question. I am not leaving you all. I am giving you my video for it. You watch it sincerely. That much you do. You write down the solution. And one more I will give you which I want you to watch. That will be, both of them are institute questions, but do watch it. Everyone clear? Next lecture na, please come and definitely tell me what you understood, what you didn't understand, etc. So that next lecture we can start fresh with new chapter, that is advanced financial management. No, advanced capital budgeting in advanced financial management. Okay. So let's start. The following details are related to the borrowing requirements of two companies, ABC and DEF. Hey, please pay attention. Can I say that if you look at them, PLR na is like LIBOR, okay? It is not LIBOR, it is basically prime lending rate. Prime lending rate could be LIBOR, prime lending rate could be MIBOR. I hope everybody is clear. So it is prime lending rate plus 2%. Tell me between the two, which company is stronger and which company is weaker? ABC, can I say, is stronger and DEF is weaker. Both companies are in need of 2.5 crore for 5 years. Interest rates on the floating rate loans are reset annually. Current prime lending rates or current spot rates or current LIBORs or current MIBORs, etc. are this. Okay, we'll talk about all of that later. Point number A. You are required to exhibit how these two companies can reduce their borrowing by adopting a swap, assuming gain resulting from swap shall be shared equally among them. Oh, have I taught you all this gain, shared and all that? Hello, it was arbitrage. Part E, I hope you remember. In your notebooks, can you go to part E please? In your notebooks please, everyone. In your notebooks, go to part E. In that, no, in the classroom, I had given in writing the examination presentation. And PDF, I think a week later I gave it to you, the explanation and background and all that. But that PDF is not of any relevance. What is there in classwork that is important? In the notebook, examination, presentation, something like that I must have given. Please check. Mil raha hai kya? Got it? Okay. So what I would want you all to now do is, oops. किधर लिखा मैं? Anyways, what I would now like you all to do is, this is question number 13. I know, wait. Okay, question 13 and students point number 1. Okay. Can you look into my notes earlier and tell me what is the first thing we did? First, identify comparative rate advantage. Okay, I have written step 1 like that. Step 1 words I have written or just one I have written? One. Okay. So I'll write here. You don't write now, just pay attention. Identify comparative rate advantage. Then what did I write there? And borrow accordingly, na? And borrow accordingly. So can you look into the question and do you remember how to identify who has benefit where? Check everyone. Don't look out of the window. Zombies, please focus. Huh? Everyone, tell me what will you do? Who is having an advantage where? Do you remember? See, ABC will get premium, na? I'm sorry, ABC will get discount. I hope everybody is clear. ABC will get a discount. The other company, can I say, DEF will have to pay a premium. So you figure out in where is ABC getting more discount. Can I say floating? Come on, everybody. ABC is getting more discount in floating, and DEF has to pay less premium in fixed. Everyone there? So can I? What should I write? Tell me here. Look into the notes earlier and tell me what should I write here. ABC. Read na what I have written there. ABC will, what did I write? Floating. ABC floating. And DF fixed. Everyone clear? DF fixed. Any doubts still here? DF fixed. All clear, no? Okay. Alright. Then what did I do? Okay. So step 2. Which is the stronger company? ABC. ABC enters into a swap with DEF to pay. Now students, please understand. ABC, can I say, is paying floating to its bank. So here opposite it will do. Here can I say it will pay fixed. To pay, however, it's fixed. I hope everyone is clear. And receive, you remember na Baba this, and receive its floating. When I'm asking you why you're not responding, you're not understanding. You cannot say yes or no, that much arrogance. Ego. Ego. Final CA student. Okay. But with that also try responding. Okay, please. Can I start? Okay. Now, you should say this. Yes. It's okay. But at least respond. Okay, ready? Okay. ABC enters into swap with DEF. I'm sorry, with DEF, na? And to pay its fixed and received its floating. Then I used to mark some arrows, na, here, you remember? What is its fixed means? ABC's fixed is how much? 4.5%, and floating is PLR plus 2. Everyone done? Okay, great. Next. Okay, so third point. Third point is calculate and bifurcate. Calculate and bifurcate. What is it? Calculate and bifurcate. Gain. I'm trying, see, don't think you don't know, sir, what is to be done. I'm trying to use exactly same languages which might have come out from my mouth then. You're understanding, na? I'm not a robot. Every batch anything can come. Of course, answers will be same. But I'm trying to use exactly same words so that when you're studying, no, you should get continuity. Okay. So calculate and bifurcate gain. Tell me what should I do? Particulars. Okay, I'll write the stronger company. I'll write first, na? So I'll write ABC. I'll write DEF, and I'll write difference. Okay. Next, I'll write fixed. It's okay. Then I'll write floating. Same thing I'll do. Okay, tell me for ABC what is the fixed? 4.5. For DF 5. Difference 0.5. For floating PLR plus 2. PLR plus 3. Difference 1. Can I say smaller one will put in bracket? Everyone clear, na? And we will get a net gain of 0.5%. Ratio, tell me what is the ratio? Ratio of sharing, can I say, is 1:1. What have I written there after this 0.5? What have I written in your notebooks? Acha, so I'll straight away write here gain to ABC. Okay, gain to ABC will be 0.5 into 1 by 2, that is 0.25. Everyone clear? And DEF. Come on, everybody. Are you all able to understand? Both of them are same, no? 0.5, 0.5, 1 is to 1. All done? Okay. So tell me what next? Huh? Always the gain, huh? Always DEF will pay the gain to ABC. That's okay. Next, swap structure. So I'll now go for point number 4. Okay, there is a swap structure. And do you realize in this question there is no swap dealer or anyone? You understand? It's simply the banks and the company. So there is a bank, there is a bank, there is ABC, there is DEF. Students, what I want you all to do is figure out what should be I writing. Come on, everybody. So there is one like this and one there is like this. Okay? Simple swap structure. Can you tell me ABC has to pay how much to its bank? I already borrowed, na? Can I say ABC has borrowed at floating, correct? So it will be PLR plus 2%, and here it will be why am I writing DEP again and again? DEF, it will be 5% fixed. Where have I written all this? Here. Identify CRA and borrow accordingly. Everyone clear? This is done? Everyone following? Okay. Next. Now ABC will enter the swap and say, boss, only mine will work. So tell me, ABC will pay its fixed. Come on, everybody. ABC will pay its fixed. That is 4.5. And can I say DEF will have to, and ABC will basically receive its floating. Its floating, can I say, is PLR plus 2% plus 0.25. Can I say DEF has to give as the share of gain? Hey, everyone, are you all able to understand? Hello, clear, no? Okay. So then next what? Interest paid. So I'll write here point number 5. Calculation of effective interest paid. Okay, calculation of effective interest paid. So I'm writing here particulars. I'm writing here particulars. Then we have got ABC, DEF. What all we used to write? Pay to bank, pay under swap, receive under swap. There is no commission or anything, so this will give you your net interest. Okay, ABC is paying to bank PLR plus 2, paying under swap 4.5, receiving from swap PLR plus 2.25. So here can I say will be PLR plus 2.25. Everybody following, no? Can you please tell me what is the total? Sure, eh? Okay, 4.25%. And do you realize 4.25% turns out to be a fixed rate? Original bank offer. Check your question. Original bank offer, fixed rate. What was offered to this ABC? 4.5. Students, can I say we have proved it correct? Can I say the arbitrage gain will turn out to be 0.25? Hey, you remember now all this? Hello. Okay, let's go to DEF. Now in DEF, tell me how much is DEF paying to its bank? Fixed 5%. It receives, it pays under swap PLR plus 2.25. It receives, can I say 4.5. So the net interest that DEF is paying, it is, shortcut mar raha na? Okay, PLR plus 2.75. This, can I say, is floating. Do you realize that original bank offer is PLR plus 3, and there is exactly a gain of 0.25. Correct? No, there is a gain of 0.25 for this also. All done till here? So this question till here you all understood. Okay. Now we go to point number B. This is going to be tricky, and please pay attention. They are asking further calculate the cost of funding to these two companies, assuming that the expectation theory holds good for 4 years. So assume that expectation theory holds good for 4 years. How many years loan they want? 5 years. Basically for another 4 years it all holds true. Okay. What will each company pay is the question. Are you there? What will each company pay? Now can I say, as far as ABC is concerned, it is saying ABC left the group. You're understanding? Because AB is saying what nonsense question. I will pay fixed now 4.5%. Are you? I'm sorry, 4.25%. Hello, everyone clear? Why are you asking me? Can the question actually is to be asked to DEF? Everyone clear now? Because DEF, do you realize, is now in a soup? I hope everyone is clear. DEF is going to be paying floating. Come on, everyone clear? How much DEF will pay? I don't know. I want you to use your brains. Read the question and tell me how much DEF will pay. Try answering. If you are in the exam, what will DEF pay? And I'm asking you to ignore the cap. Okay? Ignore the cap. So I'm making things easier for you. Read the question carefully. Everyone please read the question carefully and think how much will this guy DEF pay at the end of year 1. I'm only asking you end of year 1. Okay, how much will you don't tell me, sir, DEF will pay PLR plus 2.75. You are right. DEF will pay PLR plus 2.75. But what is PLR? I hope everyone is clear. That I need the answer at the end of year. Very simple question I have asked. Very simple question. 5.5. How you got 5.5? Do you realize that it will be 2.75? Come on, everybody. 2.75 plus 2.75. Do you all get it? That you will be paying 5.5%. Everyone follow until here. 5.5%. Done. Year 2. Year 2, please, everyone. 3 plus, correct na? 3 plus 2.75, that is 5%. Do you think the question is that easy? You have done it wrong in second year. Think hard. First year was right. Second year is wrong. Students, what is the 3%? Okay, hold on. You tell me year 2's interest. I am asking you now, how much will you pay at the end of year 2? It will be whatever is the prime lending rate applicable then plus the 2.75. Everyone there? Students, what is the problem with this number? This is prime lending rate only, no? It is prime lending rate, but I hope you understand. This is 2.75 and this, can I say, is 3% per annum. Come on, everyone, are you all there with me? Do you realize that this 3% is the prime lending rate today if you go for a 2-year borrowing? Hello, everyone there? If you go for a 2-year borrowing, do you realize that this rate will not be applicable to you when you are calculating the interest rate for second year? I hope you get it. The interest rate for the second year that will be applicable for you will be this rate, no, here, which is there here. Everyone there? At the end of year 1 till the end of year 2, you will have to first do 1y, 2y forward rate calculation. Nahi samjha? Everyone follow until here. This rate, you will not get only here. I hope everyone is clear. This rate is if you borrow today for 2 years, but that is irrelevant rate. I want to know what will be the prime lending rate after 1 year for 1 year. That rate, can I say, you will have to pay under the floating leg. No, hello, everyone there? Sure. So, what happens is, I'll first that's what they are saying. They are saying that if the expectation theory holds good for 4 years means if according to these spot rates only the forward rates are. I hope everyone is clear. According to the, do you get it that these are spot rates? 1 year spot, 2 year spot, 3 year spot. Using the spot rates, we find the forward rates. Hello, everyone there? So now I'll write here. This is point number 2. Okay, this is point number 2. Okay, in that I'll first of all write calculation of forward rates. Okay, so 0y 1y forward rate, can I say, is the same as a 1 year spot rate, and that is nothing but, what is the 1 year spot rate, please? 2.75%. Everyone there with me till here? 2.75%. Now if I want to calculate 1y 2y forward rate, 1y 2y forward rate, just for diagram purpose, if I want to draw and show, this is 0, this is 1, this is 2, correct? This part here is 2.75 and this part here is 3% per annum. I am searching for this. Everyone, are you all there? So can I say this will be 1.03 raised to 2 is 1.0275 into 1 plus r. Am I making sense? Hello. And this, please calculate and give me the number. How much? 3.25%. All done. 3.25%. Now look at me. Today if you borrow, please listen. Today, if I borrow, you want to switch off the AC? Switch it off ना, but pay attention. कर देना, रिमोट है तुम्हारे पास? अच्छा, हो ही नहीं रहा है. ओ, ध्यान दे पाओगे? चाहे तो थोड़ा वॉल की तरफ आ जाओ, because it will not hit you. Okay. If you want to go a little back and all, I have no problem. Okay, can we start please? So, students, imagine you are DEF and I am ABC. We enter into this swap. Correct? After 1 year, can I say I have to give you 4.25%? You have to give me prime lending rate plus 2.75. Do you realize after 1 year, what will be the exchange of rates? Can I say that we know today only? Because that prime lending rate after 1 year is of no relevance. Now, prime lending rate today is of relevance for the 1 year payment. Hello, everyone there? Sure, na? So today the spot rate is how much? Please tell me. For 1 year, what is the spot rate? 2.75%, correct? 2.75% is today. Plus 2.75. Can I say, I know you have to give me 5.5 and I know I have to give you 4.25. This is clear to all? Great. Then after 1 year, can I say swap leg number 2 will start? Whose payment, can I say, will be exchanged at the end of year 2? Come on. थोड़ा रिस्पॉन्ड करो ना यार, मैं नहीं पढ़ा पा रहा हूँ. थोड़ा हाँ ना तो करो, मेरे को कैसे समझेगा तुमको समझ में आ रहा है कि नहीं? क्या करूँ बोलो? मैं ऐसा जाऊँ नॉन स्टॉप, तुमको समझा तो समझा, नहीं समझा नहीं समझा, तेल लेने का ऐसा करने का है? मेरे को बताओ ना, हाउ डू आई अंडरस्टैंड तुमको समझा है कि नहीं? तुम लोग का समझा और नहीं समझा का रिएक्शन सेम है. समझ रहा है मैं क्या बोल रहा हूँ? If you are understood and not understood, reactions are same. How do I decipher which one is understood and which one is not understood? Give yes, no, no, at least. Okay, tell me. After 1 year, whatever interest rate will be there, that interest rate will be applicable for payment when? End of second year. Correct? Interest rate after 1 year, whatever it is, that interest rate, can I say, you will have to pay me at the end of second year. I will continue to pay 4.25 only, correct? That interest rate which will happen after 1 year for 1 year, do you realize is not the 3% given in the question? Come on everyone. The 3% given in the question is not after 1 year for 1 year. It is from today to 2 years. Everyone clear? Do you therefore realize that I will have to calculate the forward rates for every year separately? Hello, everyone clear? And that, do you get it, will be our forward, that will be the PLRs that we will take into consideration. Everyone following, no? See, end of the day, what actual PLR will be on the due date, etc., we will come to know then only. Here the question is saying that whatever you are sitting here and calculating theoretical, no, you assume that only is holding good. I hope everyone is clear, and that is only the reality. So according to that only you do the calculation is what the question is saying. Everyone follow until here? Okay. Now students, for that I'll have to do little hard work and find all of these numbers. So 0y, 1y done, 1y, 2y done. Now I will do 2y, 3y forward rate, and I'll be happy if you can tell me the calculation. Look into the question. How do I do a 2y, 3y? Arey, just now for that question I see here we did a 24 by 36. Tell me how to do 2y, 3y. On the LHS, what should I write? 1.032 raised to 3 is equal to 1.03 raised to 2 into 1 plus r. Everyone knows this, no? Hello. We have done so many questions also on this. So please give me the 3.6%. Everyone there? 3.6%. Any doubts? 3.6%. Give me 3y, 4y forward rate, please. 3y, 4y. 1.03 33 raised to 4 is equal to 1.032 raised to 3 into 1 plus r. Students, you're understanding now, everyone? What you should do now? You should do 1.03, raise it to 4. 1.0, I taught you this last time. 1.033, raise it to 4. And then divide by 1.032 and press equal to 3 times. Everyone clear? Press equal to 3 times and then minus 1. How much is the r coming to? Again same, 3.6%. Then students, we come to 4y, 5y. Just a minute. 4y, 5y forward rate. Tell me, what will you take on the LHS? 1.03375 raised to 5 will be equal to 1.033 raised to 4 into 1 plus r. Get me the r, please. 3.675. Everyone done? 3.675. Student, story clear till here? 100% understood? Great. Now, for the first year it is anyways irrelevant, na? Like that. Okay. So everyone, can we start, please? Okay. Now, calculation of, please pay attention, calculation of cost of funding to the two companies. Are we ready? Cost of funding to the two companies. So calculation of cost of funding. Now I am writing here particulars, or I'll write here year. There is ABC and then there is DEF. Ready? Let's talk about year 1, year 2, 3, 4 and 5. At the end of year 1, can I say ABC doesn't care? At the end of year 2, ABC doesn't care. Everyone following, no? 4.5, 4.5 and 4.5. Am I making sense till here? Hello. Now, can I say I am talking of cost of funding within, okay, hold on. Okay, I'll talk about this later. Till here clear to क्या बोल रहा है 4.25? नहीं रहे, कौन सा गेन मिल रहा है? 4. हाँ, sorry, you're right. 4.5, sorry. 4. I was talking 4.5 क्या कब से? 4.25 na actually. Your final, okay, 4.25%. 4.25%. Till your story clear? 4.25%. Done? This 4.25, I hope you realize is the entire chasma. Hello. Bank, swap, everything, can I say fixed final comes to 4.25, correct? Okay. DF, do you realize will be paying prime lending rate plus 2.75, correct? Prime lending rate plus 2.75. Now, the prime lending rate for the first year, can I say is 2.75? Hello. So this will be 2.75 plus 2.75. And can you tell me how much number this is? 5.5. Next, when year 2 payment will happen, I hope you realize that he will be, or the DEF will be using this number now. I hope everyone is clear. 3.25, correct? So 3.25 plus 2.75, 6%. Everyone there? 6%. Next, can I say at the end of year 3, do you realize this rate 3.6% will be of use? So this will be 3.6 plus 2.75. Give me the number. 6.35. 6.35. You getting clarity? Next it will be again 3.6. Okay. So I'll write here 3.6 plus 2.75, 6.35. And the last one, can I say, is 3.675. Everyone following na? 3.675. So 3.675 plus 2.75. And that comes to 6.425. Everyone getting clarity? 6.425. I think the question everyone understood. What was the only trick in the question? They had given spot rates. Can I say, listen, spot rates are known today. How can they be considered as floating rates? Hello, everyone clear? Spot rate is Baba today for 1 year, today for 2 years, today for 3 years, and so on. All this we had discussed so much in for 2 lectures, 3 lectures only. This only I was discussing forward rate agreements. Huh? So if I want to know, look at me, what floating rate you will pay to me at end of year 2. Can I say, for that I need to wait for 1 year? Hello, everyone clear? After 1 year, what rate will be there na? That rate is applicable, not today's spot rate. Everyone clear? And that rate, can I say, the only option we had was to use the 1 year spot rate, 2 year spot rate, and find the forward rate. Everyone clear? Great. We are done with the question, except I hope you realize this is without the cap. Come on, everyone. Getting the complication now. This is without the cap. Now who has taken a cap? Can you read the question? DEF has taken the cap. Everyone there with me? Okay. So can I say now with cap, when I do the calculation with cap, I have to only check for a DEF. Are you all there with me? I have to only check for a DEF. So I am writing calculation of cost of funding for DEF with the cap, whose strike rate, look at the question and tell me what is the strike rate that he has taken. 2.875. 2.875. Are you all there with me? 2.875. I'll write here again year 1, 2, 3, 4 and 5. Students, the prime lending rate, which I will now take as S1, I hope you are understanding, which basically are the forward rates which I was talking to you about. Hello. Will be these rates na? 2.75, 3.25, 3.6. Okay. So I'll just write here 2.75, 3.25, 3.6, 3.6, 3.675. Everyone done? What is the K that we have taken? 2.875, 2.875, 2.875, 2.875, 2.875. Bacha log, what is the status? OTM or ITM? Think hard and tell me. I have an option to borrow at the rate 2.875%. Are you all there with me? I have an option to borrow at the rate 2.875%. Outside it goes to 2.75. Come on, can you tell me please? OTM. Everyone clear? This is OTM. I'll write here status means OTM. Here status, can I say, is ITM, 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 ITM. Everyone there? Students, can I say we can now find the gross payoff? Please help me. Dash. Everyone, just 1 minute. 1 minute. Yeah. So tell me dash. Next. You are understanding how to do gross payoff now? Gross payoff will be S1 minus K. Correct? S1 minus K. Janam, yes. S1 minus K. Help me. 0.375. Next. 0.725. Next. 725. Next. 0.8. Everyone there? Students, do you therefore realize that DEF na will pay this only in the spot? He has no option. Hello. But can I say simultaneously from the call option, little payoffs he will get, and that will reduce the overall. Everyone, are you all getting it now? So I will therefore say, so what I'll do is I'll make one more column, calculation of gross payoff for DEF, okay, in the cap. And now I'll do one more column, one more 3-column table we'll make, 3 or 4. I'll write here calculation of net cost of funding for DEF with the cap. And then what will I do? I'll say here 1, 2, 3, 4 and 5. So I'll write here spot payment. Now spot payment, do you realize which numbers will I take? Now I'll take these numbers. Look at the screen please. The 2.75 included, everyone there? So 5.5, 6 and so on. So I'm writing here 5.5, 6. Next is, can I say 6.35, 6.35, 6.35, 6.35, and the last one is 6.425. This I have to pay, correct? This I have to pay. Do you realize minus the gross payoff which I receive? Everyone there with me? Gross payoff which I receive. Gross payoff that I receive, I'll just take it from here and I'll place them here. Everyone there? Can I therefore get it from you? What will be the net? The net interest. The net interest, can I say, is 5.5. Next one please. 5.625. Next please. 5. It has to be 5.625. Everything will be 5.625 only. Check please. 5.625. Everyone, are you all there? 5.625. Hello. In case you understand, take 5.625 on Kelsey and you remove this fixed component of 2.75. Can I say 2.75 fixed? You have to pay. Hello, everyone there, na? You remove the 2.75. If you remove the 2.75 from these numbers, I hope you realize it is effectively the cap, na baba? Hello, everyone there? It is the cap of how much cap you have taken? 2.875. That much cap you have taken. And this, do you realize, is lower than the cap? Lower than, that is the option, no? Everyone there? You can pay less also. Everyone understood? I hope my explanation was clear to all of you all. There were too many complications, but I elongated the solution so that it becomes very, you can, after writing this, shorten it out also based on your recommendation. But my personal judgment is, let us make this 3 columns and make it very clear for all. Okay. So from where you have to copy everything? Chalo, start. You want PDF? PDF? How many of you want PDF? No one. Okay. Zoom are irrelevant. They are not responding only. Okay. Ola IPO is coming. According to their sales, according to the, you'll continue writing, huh? According to the sales of Ola and considering the valuation at which they are coming with IPO, they are having a price to sales, not PE ratio, PS ratio, not price to earnings, price to sales ratio of 6.4 times, which means if sales is 100, their valuation is 640. You're understanding? If that same 6.4 times was given to another automobile company like Tata Motors, whose current sales of 24 is 4.4 lakh crores, 4.4 lakh crores, if I multiply that by 6, then same valuation, understanding the parameters, same valuation, Tata Motors value should be 26.4 lakh crores. 26.4 lakh crores, and Tata Motors is currently at 4 lakh crores. For those who understood what I tried to tell you just now, Tata Motors is currently at 4 lakh crores, 4.2 lakh crores. Correct, na? This is not a stock recommendation. This video is only for educational purpose. Investor is supposed to do his own analysis before investing. किसका? ओला. हो गया लिख के? Many people look at IPO to be the entry point, but we should realize it is actually exit point of all investors. So, forward rate agreements, interest rate swaps, arbitrage gain, and options. All three complicated concepts of those respective modules are put in one question. You realize na only futures was pending. You need not draw that, huh? We have drawn it so many times in the past. So now not required. This drawing was just my frustration to help you respond. मेरी frustration की निशानी है. लिंक्डइन पे लिंक्डइन पे कितना चपर चपर चलता है. अननेसेसरी. अननेसेसरी. कुछ भी ऐसा है कुछ देखने का लिखने के लिए लिखने छोड़. Chalo, Zoom people, bye bye. Thank you very much. I hope you all understood the class. Take care. From Monday, we are starting advanced capital budgeting.